AMC as well as GME are in the green today, leading into GME earnings. Now, we went over a pretty deep, in-depth dive of GME earnings in the last video. Go ahead and check that out if you want a little bit more detail on exactly how those names could move. Long story short, I think GME is going to move excess of 20% up or down, just depending on if GME has net profits. Stock could rally up to 50%. This would be the second consecutive quarter in a row of net profits. If they have bad earnings, well, the stock could likely fall 15 to 20% as well and be in the low 20s again. I think with AMC, there's less risk premium there, and I think AMC could benefit a lot more on an upside move with GME as a sympathy play. And if GME has bad earnings, I think it would be less affecting of AMC. So that's a long story short of what you need to know. Now, here in this video, I want to look at the option flows that are heading into AMC and GME here today, heading into earnings, as well as talk about some of the cost to borrow fees. Cost to borrow fees on AMC stock alone, up 270%. They are jumping heading into GME earnings. At the same time, some of the premiums on options are very attractive on AMC. We'll talk about that, the technicals, everything you guys need to know here in this video. Hit that like button and subscribe to the channel to stay up to date with all of this information in real time. When things happen, we like to bring them to you as fast as possible. So GME up 4.17%. I mean, just looking at the charts, you could tell just how significant of a level that we are at. We are at the same level of last earnings report where GME rallied and closed out the day March 22nd up 35.25%. And based off of this uptrending resistance level, you could easily be finding GME in the 23, 24 to 33 to $35 range if they have good earnings, depending on what's said and, kind of the longer term picture that is painted by GME's management. The stock could go higher than that. And you are at the highest levels of short interest in GME that you have seen in a very long time. This is leading some shorts in GME to hedge out some of their short positions, and they are going out and buying some calls. If you take a look at some of the option activity here today, it says 2 orders. I am looking at 3 orders right here. One of them, a July 21st $16 call for $500,000. The break even on that looks like about $26 per share for GME. You have a January 19th, 2025 $30 call, break even on that $36.70 for $135,000. And you do have a June 16th $23 put, actually, with a break even of $22 for $50,000. So you're looking at a positive order value of 69% here on the day. Over the past week, it's been very bullish with GME, sitting at a positive order value of 84%, 16 orders totaling 1.68 million. Now, what's interesting about this earnings compared to last earnings is you're kind of expecting the same results. You're expecting a loss per share of 12 cents. Last earnings, you were expecting a loss per share of 13 cents. GME came in with a profit per share, I believe, around 16 cents per share. So it was a big beat there, and the net profit is really what sent the stock soaring. But in the back of people's minds, they're like, hey, is this just a one-off profit report from GME, or is this going to be a trend of GME getting back to profitability and being able to expand the business a little bit more? And I think that question might be answered today. So that's why it's going to be such a big move from GME. Now, the live short interest of free float heading into earnings at about 21.31%, 57 million shares currently sold short. Got about 850,000 shares available to be lent out with a cost to borrow fee of 7.48%. Now, cost to borrow max at about 18%. One of the reasons why days to cover is almost 17 could be because Computershare has locked up about 70 million shares of GME. That is about 25% of the free float. Then when you consider other retail investors that are not a part of locking their shares up with Computershare, which is probably another 20% of the float, boom, you're at what, 45% of the float locked up. If you include institutional investors that are holding stock, you're at what, 30% institutional ownership. You're at 75% of the float held up. And then you got another 20% of the float that's sold short. In theory, you only have like 10% of the float that is actively trading hands every single day. And that's why you've seen low volume. And that's why if that, 20% free float that is sold short needs to cover on their short positions, if you get volume coming into GME, it's going to send the stock rocking up higher. And today's actually a lot higher of a volume day than typical. You're seeing about 7.7 million shares currently trading hands right now, and it's about 2 p.m. Yesterday's volume was 4 million shares. The day before that was 4 million shares, 3 million shares, 2 million shares, even less than 2 million shares has not been uncommon with GME over the last really just couple of months here. Since the last earnings report, volume has been very low. So if volume comes into the stock, you're going to get a massive move in GME. And if shorts cover or not, I think we could all assume what that would do for GME, right? It could be very aggressive. Well, same story with AMC, but AMC is a little bit different because AMC has already fallen a lot recently. So I think if earnings are bad with GME, AMC is not going to fall as much. If earnings are good with GME, AMC might rally by quite a bit, especially considering some of that option activity that you have seen recently with AMC has been so negative. Even yesterday, those $10 puts are just getting eaten up across the whole entire option chain. This is leading to short interest levels on AMC to be over 35% when you include those market maker shorts that are currently out on the stock. And the volatility is real. If you take a look at AMC, you got almost 22% of the float that is legally sold short, 113 million shares that would be. Cost to borrow max spiking to almost 270% heading into GME earnings. This is up from 134% yesterday. Cost to borrow average sitting at 72%, up from yesterday's numbers at about 66%. Cost to borrow minimum at 50%. Yesterday was at roughly 50% as well. So you are seeing some volatility picking up in AMC stock, and I think that will continue up until the close today when GME does report their earnings. Option flows for AMC, well, kind of bearish. Today you're seeing a July 21st $10 put worth $3.06 million. You are seeing an August 18th $4 call with a break even of $5 per share. That trade worth $56,000. So you've seen it looks like a bullish position, first bullish position in a long time, actually, from institutional investors and hedge funds targeting an upside move. That's been kind of uncommon, but these large trades, like a $3 million trade at the $10 put, is suppressing the stock. So I think the stock would be up a lot more today if it was, not for that. And I think if GME does have good earnings, you could send the stock up to gamma squeeze levels that market makers would have to start buying back massive amounts of AMC stock. Now, if we take a broader look at what's happening here in the markets today, the biggest thing that is really affecting the markets is the Bank of Canada unexpectedly hikes rates to 4.75%, and some people are expecting them to raise even more. This is after the Bank of Canada previously paused at 4.5% for the last 2 meetings, I believe. And what this is doing for the probabilities of a rate cut in our markets is really pushing them back. At one point, markets were expecting 3 to 4 rate cuts by the end of this year. And now, you're not really expecting rate cuts at all. By November, you're expecting 1 rate cut to have the federal fund rate in between 5 and 5.25. Even by September, you're not expecting that. You're expecting the rates to be in between 5.25 and 5.5. Rates right now are 5.25. So by September, you're still expecting the Fed to raise one more time and to hold rates constant. November is the first time you start to price in a cut with 40.3% probability of that. By December, the average consensus is still only for one rate cut, and that probability is 37.2%. So you have clawed back a lot of those rate cut forecasts in 2023. By January of 2024, you're expecting another rate cut to have the rates in between 4.75% and 5%. That's what is really taking a toll on big tech here today. And that is what ultimately could help AMC, go higher as well, as the collateral crisis, is definitely getting a little bit worse here today, as the NASDAQ is down 1.35%. Other stocks such as Meta down 1.6%, Apple down about 1%, Microsoft, Google, Amazon, all of those guys pretty much down here on the day, is definitely helping our case with AMC. AMC stock is up 1.5%. GME is up almost 5% heading into their earnings, which is a pretty crazy move heading into earnings. Nonetheless, the market's not pricing in those rate cuts anymore is bad for technology, right? Technology has really been soaring off of this notion that the Fed will be cutting rates 2, 3, 4 times by the end of 2023, and that's not looking so likely here today, guys. So that is going to do it here for your intraday update heading into GME earnings. I hope you guys are ready to go. It's going to be a lot of volatility. Hit that like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. If you guys do want to come trade with me live in real time, link down below in the description of this video as well. You guys have a great rest of your day, and I will see you in the next one.